Are you an accounting or tax professional who wants to stay ahead without spending a dime? Join thousands who trust insightful accountant and tax practice news to keep them informed and empowered. Get expert updates on QuickBooks, Xero, tax planning strategies, and workflow tips delivered straight to your inbox. Whether you're a solo bookkeeper, firm leader, or tax advisor, these newsletters are your shortcut to what's next in the profession. They're free, practical, and built for people like you. Visit insightfulaccountant.com and hit subscribe to start your smarter workflow today for free.
All right, Kristen, while people roll into the room, and then I'll jump into my thing, but it is September the 17th, 2025. You said in the green room, this is too close after tax season, or tax deadline. It's an easy question. Thumbs up, thumbs down for this tax deadline. How'd it do you?
Well, mine was actually okay. It was hectic, but it was fairly straightforward. I had some cleanups.
Yeah.
So
All right. Well, good. Yeah. And if you guys were involved in that tax deadline, put it in the chat. Let us know. So my name is Gary Dehart, and I'd say welcome to today's webinar, Accounting for Taste, More KPIs that Restaurants Need and How You Can Use Them. I am the host of today's webinar, and our speaker is Kristen Nies Ciraldo, and she is the founder of Math for Food. And she will kind of introduce herself and jump into her presentation in just a moment. Before I do have one poll question and then a couple of housekeeping items. First poll, Matt, if you wouldn't mind launching that around our Be Insightful and the upcoming cruise that we're doing in July of next year. So basically, kind of as a leader, when the poll popped up, it took away my cheat sheet. So hold on one second. So as a leader in your practice, you need time to think, you need time to plan, and guidance in building your growth strategy. So join us, Insightful Accountant, along with Dawn Brolin and Vanessa Vasquez, as we cruise the Caribbean while working on your growth strategy for your firm. So high level, 7 days at sea, 3 working days while we'll be working on your business. So join us in this unique setting as we work, relax, network, and repeat on the cruise ship Celebrity Beyond. If you'd like more details, just say yes in the poll and we'll get it over to you. If not, we will not harass you. And while you just finish that out, a little bit of housekeeping. This is only a 30-minute webinar, so there is no CPE, but we do want you to ask questions, and you can put those in either the Q&A or the chat. I'm not sure which one's enabled, so we'll just have to check them both. And then you will receive an email following this event with the link to the archive, which will be posted on our YouTube page, as well as a link to the box folder with a copy of the presentation. So lastly, after this presentation is over, we would just appreciate it if you would fill out the survey. 3 questions, I think. Super short, takes you maybe 30 seconds to do it. Just allows us to give some feedback to Kristen. So there you go. Kristen, thank you so much for being here. Thank you for sharing your depth of knowledge on the restaurant. And actually, before I turn it over to you, do you consider hospitality and restaurants 2 different things, are bars part of restaurants in your world? Burf asked that question yesterday, and I said, you know what? I'm gonna have to ask Kristen.
you know what? It actually depends on what we're talking about because there's a lot of crossover. That some things are very different.
Okay.
So there are some apps that I would recommend for all the hospitality industry, or some that I would recommend for the whole food and beverage industry, even if they're manufacturing. And
Okay.
some that I would be like, no one should use that except the bar or whatever. So it
Gotcha.
depends, which is a classic response to any accounting question.
Right. Yeah. It depends.
It keeps us in business.
Right. There you go. Perfect. All right. Well, thank you so much for being here. And thank you for people who are attending as well. Talk to you soon.
All right, guys, we're going to jump right into it since we have about a half hour. This is Accounting for Taste, and this particular session is on some additional KPIs. We went over prime cost last month. If you missed that, you can definitely check it out. There's a link at the end of this session inside the actual deck, but you can also find one it's basically a recording in the Insightful Accountant YouTube channel. So we went over prime cost, which is basically cost of goods sold and labor combined. For those of you who don't know me, my name is Kristen Nies Ciraldo. I've been working with restaurants for 25 years in all different kinds of capacities. I started actually in restaurants before I started in accounting, so this is literally my native language. Beyond all that, the way I like to approach anything I do is thinking about what my clients need, what the industry I'm serving needs, and what is going to be best for like sort of both sides, a win-win. So when we're talking about KPIs, really what we're talking about is insights. And what I would like you to think about as you're listening to this webinar is what makes a good insight for you and for your clients. These are sort of, each column is sort of one side or the other of a sort of continuum. And where you fit on these in terms of what you like to do for clients, what you like to do for in your practice, what jives with the way you like to work, with the employees you have, with the price modeling you have, all of that stuff. And what I try and do is at the end of the webinar, revisit these and talk about, hey, if you fall on these particular metrics in this particular way, restaurants or bars might be a good client niche for you. Or if you are in restaurants and bars doing higher level advisory, using these KPIs might be a good way for you to expand your service offerings. So just keep these in mind. Now, in this session, we're going to talk about 3 additional KPIs. Like I said, last month, we talked about cost of goods sold, labor costs, and prime cost, which is basically the combination of those two. This time, we're going to talk about 3 other KPIs. First is occupancy, which is basically all the costs associated with having a physical presence in the world by a restaurant or bar. Operations, which is kind of a complicated definition that depends a lot on what isn't done elsewhere. So we'll get into that. It's hard to summarize, but the details there definitely matter. And then a third KPI that, as far as I know, I think I made up. Maybe it exists somewhere, but I found it helpful. We'll just refer to it now as it's a new net income, or it's new bottom line for you to use when you're talking with restaurant clients. It helps with advisory and getting restaurant clients to focus on what matters, what they can actually change. So we'll start off with occupancy. Occupancy is just where a restaurant exists in the world. Now, for those of us who like to really get down in the details, it can be hard to draw a line between what's occupancy and what is operations. For instance, repair and maintenance. If I'm doing repair and maintenance on the roof, is that occupancy or is that operations? Here's how I like to think about occupancy. I like to go back to the whole reason that we're actually breaking it out, which is what makes it key for clients and what makes it key for us as accountants. The number one thing that makes it a key metric for clients is that it's pricey. I mean, it's not as pricey as all the prime costs, but it is pricey. It usually falls around, the target people like to say is 10%. But the reality is, in places like where a lot of my clients are along the coast of Southern California, 10% is a hot dream. You know, you're doing great if you're at 10%, because the price of real estate is basically high. It also depends on what your format is. If you've got a food truck, that might be different than if you have like a fine dining restaurant, etc. But basically, it's a large cost. And what makes it a large cost isn't just the money. It's also the fact that it's permanent. It's a cost that likely can't be changed. When you talk about utilities, when you talk about rents or leases, that's a choice you've already made. And even if you can re-up your lease, that doesn't mean you want to. Chances are you've done a build out of your whole restaurant. Picking up and going somewhere else isn't exactly the easiest thing in the world to do. So essentially, this is a permanent fixture. This is a permanent KPI, and it's relentless. These costs happen whether or not you are open, whether or not you have sales, whether or not there is a hurricane or, heaven forbid, COVID. Now, sometimes there's a true natural disaster, you get some credits back from, let's say, whoever you're paying rent to. But more often than not, that's not the case. If you are slow and it's just you and not everyone else, your rent doesn't change. Even those of us who are, or those of us who have clients who are paying rent based on a percentage of sales, there typically is a minimum. And so this is truly a relentless cost that shows no mercy when it comes to sales. That being said, the opposite is also true. This is a relentless cost that doesn't change much if you have great sales. So it truly is a fixture in your client's world. That's what makes it key for clients. So the usual costs, this is a very condensed look, but what I usually put in there is rent or lease, property taxes, utilities, and security, like external security. And if someone is renting parking for their customers, basically anything that we're doing has to do with rents that happen whether or not we're open, and they don't have to do with the internal experience inside the restaurant. So I know that's kind of a fine line. You could say, well, my clients rent their dishwashing equipment. They have to pay that rent whether or not they're open. Fair. But if we're using the determiners of has to do with the location and it has to do with something that can't really be changed. These are the categories that tend, or the accounts that tend to come up the most. They make the most sense when you're looking at something like occupancy. They are usually bound up. Not a lot of us have the luxury of pricing or switching electricity providers or gas providers, and they tend to just be relentless. This actually gives us a lot of opportunity as accountants. So these costs tend to roll on whether or not anything else happens, whether or not our clients get us receipts. These tend to be recurring costs that we end up having access to or end up being able to be set up as auto pays. So we really, in this particular metric, don't typically have a lot of reliance on clients to get this one right. The influence of occupancy is as much about where it isn't as where it is. In other words, yes, occupancy as a metric is important, but what's also just as important is keeping the occupancy type costs out of the other metrics. So being able to see something like operations or labor without all of these fixed and non-manageable costs muddying the waters. And also, these are just gems for automation. Usually they are on auto pay, and at minimum, they can usually be easily recognized by banking automations. So truly, these are some really low maintenance KPIs. And like I said before, typically people like to point at an occupancy rate of about 10%. I'm finding that these days my clients are hovering more around 13%, and that is viable and they're happy with that. But it really does depend on your lease and how your rent or lease actually functions. So the good news is you have to, the bad news is you might have to do some calculations to find out the target KPI percentage for this as compared with sales. But the good news is you'll probably only have to do that once since they stay pretty steady, typically. Second KPI for today is operations. This one it can feel like a bit of a catch-all. This is basically everything up to this moment that isn't in labor, cost of goods sold, or occupancy. But it's not just a catch-all of everything except admin costs. It truly does have a North Star to it, even though it can just feel like everything that you don't know where to put anywhere else. So we can't really talk about operations without talking about admin for just a second. And the way I like to explain admin costs to my clients, because basically everything else we have going on in the chart of accounts at this point that are regular expenses is either in operations or it's going to be stuck in admin. And how I like to think of admin is these are the decisions that were made by owners about how to run their business as a business, not necessarily how to run their business as a restaurant. So decisions about the dishwasher or what kind of menus to use, that's a restaurant decision. And those can be changed. Decisions about how to advertise, that might be more of a owner decision. Also, admin costs tend to be those that were decided well in advance and are harder to pivot or change, and also don't have to do with the customer experience of the actual business. So while you might be able to pivot advertising and things like that relatively quickly, it doesn't really, once the customer's in the door, they're not really experiencing advertising. That might be what brought them there. That's not what they're experiencing in the moment. So operations really does, if you think about, not only can it be managed or decided by management or just changed fairly easily, or is it regularly experienced by customers while they are customers? If you think of those two things, that will guide you to a good place when it comes to operations. So, why are operations key for clients? It is a lot of money. Again, it's a lot of money, but it's not just that it's a lot of money, it's just a lot. This is where a lot of little expenses happen. Yes, a lot of expenses happen in cost of goods sold, and certainly labor can be a lot of different categories and things like that. But this is sort of the wild west of expenses. Like it's everything from mints at the host stand to like I said, menu covers, but then we also need a new filter. We have to have the grease trap service, like all the things, just all the things that embody the chaos of a day-to-day operations of a restaurant. And because of that, it can be easy for these expenses to become out of control in terms of either over becoming over detailed in the accounts that we use, or combining things together that are just too much. So it's a lot. But for clients, it's critical because these are the costs that connect things like labor and cost of goods sold or occupancy and prime costs, or even the administrative costs advertising and promotion to their sales. These are the connector costs, and they tend to be little, and there's some recurring stuff in there, and there's some subscription stuff in there. It's a wild west. But they are the things that make everything else work. Because of all that, it can be overwhelming for your clients. Unlike prime costs, unlike even occupancy, a lot of times clients don't know what to look at here. They don't know what to do with these costs. They don't know how to respond to these costs in the POL or POL in the P&L because it's not as straightforward what they should be getting from it or what it all means. We're going to address that in just a second. It's really an opportunity for us as accountants. So first of all, the receipts. Oh my goodness. It's just everywhere. There's going to be a lot of stuff you never see a receipt for. It's just a charge coming out of the bank. A lot of other times, this is going to be the stuff that you're like, where half of it is like paid out of the safe with petty cash, or something got put on the owner's credit card. So this really is where you're going to earn your money in wrangling things and finding ways for these kinds of costs, the on-the-fly costs, to be reported to you or captured more readily by clients isn't just good for you. It's actually going to be what makes them feel more calm. Because believe it or not, most of our clients, whether they're restaurant clients or not, want to do a good job being an accounting client. They don't want to feel dumb. They don't want to feel like they're not doing business right. They don't want to feel like their finances are chaos and they're disorganized. And this is the area where it's really easy to just feel like it's a hot mess. I shouldn't even try. It's just always going to be a hot mess. So this is an opportunity for some real sort of workflow stuff, and also an opportunity to get your clients to understand what really matters and what doesn't, what you don't need from them and what you absolutely do. If you will set their mind at ease on what's most important, chances are they'll actually prioritize it and do it. So what is most important? What makes operations right us in terms of accountants? Well, first of all, the setup is where you earn your money as an accountant, but it's also going to be a big payoff for you if you want to talk with your clients about advisory stuff, which is basically just talking to them about their books in a meaningful way. Like I said, the routines, taming this chaos isn't just good for you, it's good for clients. They will appreciate it. It will not be as hard for you to tame as they think it will be, which means that you have money in the bank in terms of goodwill with that. And it's actually the category where you're going to need the GM and the kitchen manager and stuff the most, because wrangling all this chaos is going to it takes a village. But again, this is where you earn your money, and this is where your clients are really going to feel your value, because an idea about their labor costs and their food costs. It's all the extra stuff that they don't quite know how to interpret and don't quite know how to handle. So what do you want to tell them about these costs? Well, first of all, the key to this is really separate matters. And what do I mean by that? At minimum, you want the cost to be separated by what can be managed versus what is fixed. In other words, there's fixed costs, right? And those are the costs that obviously are the same every month or every week, subscriptions, all that kind of stuff. But then there's also costs that might vary. They don't have, their variation doesn't have a real one-to-one relationship to sales. Or it doesn't have a real one-to-one relationship to the manager or the GM or the kitchen manager being able to do their job well. It's just something that varies. Maybe it's the reservation system. I don't know. I can't even think of an example right now, but basically, the end all be all isn't fixed and variable. In this world, in the world of operations, the end all be all is, can it be managed? Can it be impacted by management, or can it not be? And by management, I mean the manager's day-to-day on the ground. I do not mean, can owners decide to next year use a different service? Getting that right means your operations section goes from being the chaos and the Wild West to a place where your clients can actually start to hold their management accountable. If they know what accounts to look at that are able to be managed, that aren't just recurring, then they'll know how those things are doing in comparison to sales. And how you do that, how you isolate that impact and make it easy to hold people accountable, is you make sure that the things that have nothing to do with sales don't mix with the things that do. So for instance, if I go back to this example, credit card processing absolutely has something to do with sales. Can your manager's management manage it? Absolutely not. That is a decision made long ago. And depending on your POS, you might not have had a choice in the matter. Same with software as a service. It's not something that they can manage day to day. They might manage the use of it, but the cost? No, not really. They might be able to say, hey, we don't need this service anymore. But that's an on-off situation, not a managing costs on the fly situation. Supplies, outside services, repair and maintenance, all that stuff, absolutely you can hold managers and GM and kitchen staff accountable for. So keeping the costs separate that people can actually impact is where this particular KPI goes from just the catch-all that doesn't belong anywhere else to something that's really going to differentiate your services from other people, and also that restaurant's ability to do well from how they could do before you were giving them these insights. This is truly something that only you can know. and that only you can help them know. I just want to say something for the record. Advisory doesn't mean that you give people the answers. Advisory means that you give people the data that will let them figure out the answers, especially when it comes to restaurants. That's why you don't have to be a restaurant expert to help restaurant owners. You just have to get the data in a form where they can use it to figure out what they should do. They're the experts at that. You just need to give them the data that's clean enough that they can do what they need to do. So, operations, separate matters. So, I like to combine all these things into something I call net hospitality. It's basically it's a third bottom line. We know about net other income and then like the net income that comes from regular expenses, and then the true bottom line that comes from, you can tell I use these a lot, right? Like I don't even remember the names because I use net hospitality more than anything else. And it's basically really easy to calculate. It is just, and I say, oh no, not this again, because basically we're doing something similar that we did with prime costs. We're taking the sales, we're subtracting out the prime costs, subtracting out the operations, and subtracting out the occupancy. What does that leave on the P&L besides our net hospitality, admin costs, things that aren't involved in the day-to-day running of the business? By looking at something like net hospitality, it gives your clients insights. What can they know by looking at this number? First of all, it's really quick to calculate. Like if you have these sections set up according to your KPIs on your P&L, it is one calculation, one formula that is all pluses and minuses, no dividing, no anything, just net hospitality as a percent of income, the end. It's forgiving. What do I mean by that? Prime cost is something that will make it so that your clients can compare across months, across seasons, all of that stuff. Net hospitality is that on a larger scale. It allows you to take into account all the supplies, even compare with other people in your same area. Like for instance, hey, how am I doing compared to other people in this geographic area? We all have a similar rent percentage. We all have a similar occupancy issues. And it's easy. It's not only easy to calculate, it's really easy to talk to restaurant owners about. I find that restaurant owners understand this metric faster than accountants do, because to them it's very intuitive. Like, hey, there's stuff I decided a long time ago and stuff I can't control that has to do with taxes and the government and my advertising contracts and the insurance I pay for my business and the licenses and health insurance, like all the things. And then there's the stuff that I do day to day. And by giving them a net income on stuff they do day to day, on stuff they interact with day to day, it's gold for them. Why is it good for us? Well, first of all, it being gold for them is good for us because it makes the value of what we're giving to them more apparent. It's quick. It's very quick. You can program it in. In fact, if you're on zero, you can literally just put a little formula inside your P&L to just calculate it for you. It's forgiving. It allows your clients to zoom out from the minutia and look at the bigger picture across months. Restaurant clients are very used to dealing with high pressure, very fast situations. What can be very difficult for them is to zoom out and see a big picture. This allows them to do that very quickly. And it's easy to talk with them about. So, why is this a great metric to have in general? It allows you to compare across partnership types, business types, across levels, like so chains versus hospitality groups versus just mom and pop places, and even across geographic areas. So inside a particular region, it allows you to like take that rent into account, take those electricity and gas and all that stuff into account, parking, all that stuff. It just allows clients to talk with other restaurant owners, which they do a lot, using more of what their business does day to day in those conversations. Prime cost is great, but talking about hospitality net is a more full conversation with other people without revealing how much they as owners are pulling out of the business, whether they're running their car through the business, how much they're spending on advertising contracts, how much they're spending on like consultants or like business, are they business coaching? Are they traveling a lot? Are they experimenting with the menu? Like all those things, you don't have to talk about those to have a meaningful comparison because then we're not looking at the bottom line that has all that stuff. Again, it's the history and being able to talk across the industry. So what is the value? Like, what is the value you're going to bring? We assume that we have to have a solution before we know the question, let alone explain potential answers. That's being psychic. We just have to set up a situation where we are better able to answer questions as they come up. So what are we going to do? Just like with prime costs, we're going to build in some signs inside the chart of accounts that make it really easy to get at these numbers. This is what it looks like. A collapsed P&L basically becomes a dashboard. I can run it anytime and it tells me where they are on all these metrics. Now, again, this is a QuickBooks one. If this was 0, I could just have a calculation down here and give myself a net hospitality. But even now, it's one calculation, just taking net operating income and adding back in admin, and I've got my net hospitality number. So circling back to, oh my gosh, I can't believe I just said circling back. Circling back, what makes a good insight? Given these 3 metrics and given the things we've talked about, if you are interested in having clients where you work with existing data rather than having to do bespoke one-off things, if you're looking for built-in insights that are easy to access quickly, that are readily available with the data that you already have, that cut into their day-to-day operations and that give them insights that are immediately applicable rather than you as an advisor needing to tell them how to apply it. And the kind of insights that they can use immediately rather than sit with for a while and make bigger schemes. Some people like that kind of work, but if you're more into quick wins, immediate applicability, and just general usefulness, using these KPIs along with prime cost for hospitality clients can really level not only their business, but also your business. And this is my ever-present final permission slip. If you think that you cannot do books for restaurants because you don't know enough about restaurants, you need to stop thinking that, because I promise you, you've been to restaurants more than you've been to the dentist, I hope. And you know enough. You know more about restaurants than probably any other business that you don't run. So I promise you can do it if you're interested. Don't let that stop you. If you're not interested, that's a different story. But don't let not being an expert stop you, because honestly, you're more of an expert than you know. And that's it. It's your turn. Before we get to Q&As, though, just so you know, all of the series is available on YouTube. There are links inside this this deck. In addition, there's a link to a course I have on Royal Wise about how to serve restaurants using QBO. A lot of the stuff that I talk about in terms of chart of account creation and that kind of thing is present in that 3-hour course. And that's it. Any questions? And sorry, I went a little bit long. Half hour goes fast.
We actually have one question in Q&A, Kristen. It's from
Okay.
Andrew's attendee.
What is your method for pricing the bookkeeping or advisory to restaurants? As a percentage of sales or by number of transactions? Well, I don't use number of transactions because we have a lot of transactions, and the transactions tend to be similar no matter the size. It tends to depend more on the complexity of their food than it does on their actual like sales and stuff like that. So I don't use that. Plus, automations make, and there are a lot for restaurants, tend to make transaction number less of an issue. I do consider sales, but I do that as a shortcut to knowing how complex what I do for that restaurant is going to be. Not because I price off a percentage of sales, but because sales tend to equate to the complexity of my services for restaurant. However, keep in mind for myself, the kind of work I do is I have like a concierge based practice. I guess that's what it's called now. I've had it for forever. But I don't really have like scope and stuff like that. So that's why that kind of pricing model works for me. What I will tell you is that a lot of people have a lot of different opinions on this, and they are all right for each of their businesses. But on the whole, restaurants, particularly ones that have been open for quite some time, are used to paying more for accounting services. They were getting advisory from their accounting people since before that was a thing that you paid separately for. That was just what the bookkeeper did. So truly, although people think this is a hard industry, it is also an industry that is very, 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 very used to looking to their accounting person for insights, for gut checks, all the things. So it is a great industry to serve if you feel like the routine of just producing numbers and not ever seeing where they land isn't as fulfilling as you'd like it to be. That's just my 2 cents as a totally biased person. Someone asked if there would be a replay available. Yes, there will. It will be on Insightful Accountants YouTube site. And like I said, in this particular deck, there are also links to the 3 other sessions that we've already done.
Yep, I'm dropping that down into the chat, the YouTube channels in the chat one more time.
And Gary, I will send you the deck as soon as we hang out.
That sounds great. And that'll be dropped into the on the box folder, I believe it is, which will also be sent to you in a follow-up email within 24 hours. It may even go out this afternoon. I'm not sure. So, all right, Kristen, is that it? You good?
Yeah, also on that chart of accounts, and actually, I don't know, I might have gone past it too far. I have a QR code that you can click. And if you send me an email or sign up on that QR code, I'm happy to send you a free example chart of accounts, the P&L section. Just for saying hi.
Great. Well, there we go. And that's in the deck that will be mailed out to people.
Yes.
And
yes.
One other question for you, and that was, I know last month when we kicked this off, you were either had just launched or you were about to launch a course on RoyalWise.
Yes.
Do you have a link? Do you have a link you can point people to?
I do. It is actually in the deck as well. I can,
Okay.
Since we're shutting this down probably in like 2 minutes. So last time I had just recorded it like the day before. Now they've processed that recording. What they do, it's so smart on RoyalWise. They have a live session. It was 3 hours. Then they take that recording and they package it up and make it into a course that you can take whenever you'd like.
Perfect.
So, and
there
you
go.
get CPE for it and everything. So
Yeah.
that also has a link on the same last page of the deck. And I will also include it in any email responses that I have.
Great. All right. Well, thank you so much. Yep. All right. Well, thanks, Kristen. Thanks everybody for being here. And
thank you very much.
Yep. There's a QB Talks that kicks off in about 20 minutes. So I know Matt needs to run. So we are out of here. Thank you much.
Bye.